Most traders blame the market when their accounts blow up, but here's the uncomfortable truth. The real battle isn't against price action, volatility, or even bad news. The real battle is happening inside your own mind, and you're losing it every single day without even knowing it. What I'm about to share with you isn't another strategy or technical indicator. This is about the dark psychology that destroys even skilled traders from the inside out. This is about why your brain actively works against your success, and how the very thoughts you trust are sabotaging every trade you make. If you've ever wondered why you keep making the same mistakes despite knowing better, or why your best strategies suddenly fail when it matters most, then you need to understand what's really happening behind the scenes of your decision-making process. See, most people think self-sabotage is obvious. They picture it as revenge trading after a loss or going all in on a risky setup. But the truth is far more sinister. Real self-sabotage is invisible. It's the small voice that makes you hesitate on your best setups. It's the rationalization that convinces you to move your stop-loss just a few pips. It's the sudden urge to change your strategy right when it starts working. This isn't about discipline or willpower. This is about understanding that your mind is running programs you didn't even know existed, and those programs are designed to keep you exactly where you are right now. Let me paint you a picture. You've been trading for months, maybe years. You know your strategy works because you've backtested it. You understand risk management. You've read the books, watched the videos, maybe even paid for expensive courses. But somehow, when you're sitting in front of the charts with real money on the line, everything changes. You see a perfect setup. Your system screams buy, but something makes you wait. Just one more confirmation, you tell yourself. By the time you finally enter, the best part of the move is already over. Or worse, you enter late, get stopped out, and then watch the market continue in your original direction. Other times, you nail the entry perfectly, but as the trade moves in your favor, anxiety creeps in. What if it reverses? What if this is the top? You close the position early, taking a small profit instead of the big winner you planned for. Then you watch helplessly as the market continues moving in your direction for the next several hours. These aren't random events. They're not bad luck. They're your unconscious mind protecting you from something it perceives as dangerous: success. Here's what most traders don't understand about the human brain. We don't actually have one brain making decisions. We have three distinct systems, all operating at the same time, often pulling us in completely different directions. The first is your reptilian brain, the oldest part of your neural architecture. This system only cares about one thing: survival. It doesn't understand markets or strategies or profit targets. All it knows is that when numbers change rapidly and money is at risk, something dangerous might be happening. So it floods your system with stress hormones and makes you want to flee or fight. Then there's your mammalian brain, your emotional center. This is where feelings live, where pleasure and pain get processed, where your need for social acceptance and fear of shame operate. This part of your brain doesn't care about your trading plan. It cares about how you'll feel if you lose, how others might judge you if you fail, and whether this trade will prove you're smart or expose you as a fraud. Finally, you have your neocortex, your thinking brain. This is where your strategy lives, where you analyze charts and calculate risk-reward ratios. This is the voice that says, take the trade, or follow the plan. But here's the problem. When stress levels rise, when money is on the line, when emotions spike, your reptilian and mammalian brains can completely override your logical mind. You've experienced this. You know exactly what you should do, but you do something else entirely. In that moment, you're not thinking with the same brain that created your trading plan. You're operating from a completely different neural system, one that's designed for survival in life or death situations, not for making calculated financial decisions. This is why traders can be absolutely brilliant during market analysis but become completely different people when they're managing live positions. The brain literally changes its operating mode when it perceives threat, and unfortunately, risking money always registers as threat to your primitive survival systems. But the psychology goes even deeper than stress response. Your unconscious mind is also running identity programs that you probably aren't even aware of. These are beliefs about who you are, what you deserve, and how the world works. They were programmed into you during childhood, through family experiences, through every interaction you've had with money and success throughout your life. If somewhere deep down you believe that you're not the kind of person who gets to be wealthy, your unconscious mind will create situations to prove that belief right. If you believe that every time you get ahead, something bad happens to knock you back down, you'll unconsciously engineer those exact scenarios in your trading. This isn't mystical thinking. This is how self-concept works. Human beings have a powerful drive for internal consistency. We hate contradicting our self-image, even when that self-image is limiting us. So if your identity is built around being someone who struggles, who almost makes it but never quite gets there, you'll unconsciously act in ways that maintain that identity. The market becomes a mirror, reflecting back exactly who you think you are. Every trade becomes an expression of your deepest beliefs about yourself, your worthiness, and your relationship with money and success. Think about your own trading for a moment. Do you notice patterns in when your worst trades happen? Many traders find that their biggest losses come right after their biggest wins. They'll have a fantastic week, then immediately do something to give it all back. That's not coincidence. That's their unconscious mind saying, "This doesn't feel right," and finding a way to return to familiar territory. Other traders find that they can never quite break through certain profit levels. They'll get close to their monthly goals, then suddenly start making uncharacteristic mistakes. Their brain has essentially set a thermostat for their financial success, and anything above that level feels dangerous and unfamiliar. This is compounded by what psychologists call the illusion of control. Your ego wants to believe that you can control market outcomes, that your analysis and strategy give you power over something that's fundamentally unpredictable. When trades go against you, instead of accepting the loss and moving on, your ego gets activated. You start thinking, "I just need to be right about this one," or "I can't let the market beat me." That's when you start overriding your rules. You move stop losses. You add to losing positions. You hold trades longer than your plan specifies, hoping they'll turn around. You're no longer trading your strategy, you're trading your ego. And the ego makes terrible trading decisions because it's not designed for probabilistic thinking. It's designed to protect your sense of self-worth. The consequences of this psychological warfare are devastating. Even profitable strategies become inconsistent when self-sabotage takes control. You'll have the knowledge and the tools, but you won't be able to execute them consistently because part of you is working against your conscious goals. Traders caught in this cycle experience what I call the sabotage spiral. They make emotional trades, which reinforces negative beliefs about themselves, which makes them more likely to repeat the same patterns. Over time, this becomes their normal operating mode. They've literally trained themselves to fail, not through lack of knowledge, but through unconscious repetition of self-defeating behaviors. The most insidious part is that self-sabotage often disguises itself as rational decision-making. You'll convince yourself that you have good reasons for breaking your rules. The market looks different today. This setup is slightly different from your usual criteria, but it's close enough. You're just being flexible, adapting to changing conditions. But if you track these decisions over time, you'll see the pattern. Every adaptation takes you further from your plan. Every special circumstance happens when you're in an emotional state. You're not making rational adjustments, you're rationalizing emotional impulses. So how do you break free from this psychological prison? The first step is brutal honesty about your own patterns. You need to start tracking not just your trades, but your emotional state before, during, and after each trade. When do you deviate from your plan? What feelings precede your worst decisions? What beliefs get activated when you're under pressure? Most traders skip this step because it's uncomfortable. It's much easier to blame external factors than to confront the ways you're undermining yourself. But until you can see the patterns clearly, you can't change them. The second step is building what I call emotional pre-commitment systems. These are rules and processes you put in place when you're calm and rational, designed to protect you from your own impulses when emotions spike. This might mean automatic stop losses that can't be moved. It might mean position sizing rules that you follow religiously. It might mean walking away from the computer after a certain number of trades, regardless of how you feel. The key is making these decisions when you're not under pressure, then treating them as non-negotiable when emotions are running high. You also need to practice what I call simulated failure. This sounds counterintuitive, but many traders are so afraid of losing that they can't function normally when real money is at risk. By deliberately practicing taking small, controlled losses in demo accounts or with minimal position sizes, you can desensitize your nervous system to the experience of being wrong. The goal isn't to become comfortable with losing money. The goal is to become comfortable with the emotional experience of being wrong, so that when it happens in real trading, your primitive brain doesn't hijack your decision-making process. But perhaps the most important shift is learning to separate your identity from your results. As long as winning trades make you feel like a genius and losing trades make you feel like a failure, you'll be emotionally reactive to market outcomes. The market will control your mood, and your mood will control your decisions. Successful traders learn to see the market as a place to express a process, not to prove themselves. They understand that any individual trade is essentially meaningless in the context of hundreds or thousands of trades over months and years. They can take a loss without spiraling because they've trained their minds not to interpret market outcomes as judgments on their personal worth. This requires rewiring some very deep psychological patterns. You have to prove to your unconscious mind, through repeated experience, that success is safe. That you can handle winning without it destroying you. That being wrong about a trade doesn't make you wrong as a person. This process takes time because you're essentially reprogramming survival instincts that have been with you for your entire life. You can't override years of conditioning with a single good week in the market. You have to approach it like training a nervous animal. It doesn't trust you at first, and it reacts to any sudden movement. Your brain is the same way. It resists change because change feels dangerous. But here's what most traders miss. The resistance itself is information. When you feel the urge to break your rules, when you start rationalizing emotional trades, when you catch yourself making the same old mistakes, that's not failure. That's your unconscious programming revealing itself. Once you can see it clearly, you can work with it instead of being controlled by it. The tragedy is that most traders never get to this point. They keep looking for better strategies, more advanced indicators, or secret market insights. They think the solution is technical when the problem is psychological. They don't realize that they're not just fighting the market, they're fighting themselves. And here's the uncomfortable truth. Many traders secretly prefer the struggle. The emotional highs and lows of inconsistent trading provide a kind of excitement that steady, boring profitability can't match. If trading is your primary source of adrenaline, drama, or validation, then fixing your psychology will feel like you're removing the best part of the experience. That's why so many traders remain stuck. They say they want consistency, but they're addicted to the emotional intensity of their current approach. They'd rather lose money than lose the rush. But for those who are serious about transformation, who are willing to do the psychological work, the rewards go far beyond just better trading results. You develop emotional regulation skills that improve every area of your life. You learn to separate your self-worth from external outcomes. You become more comfortable with uncertainty and ambiguity. The irony is that once you break the self-sabotage cycle, trading becomes almost boring. The drama disappears. You stop feeling alive every time a position moves in your favor. You're no longer playing for emotional stimulation, you're playing to get paid. And that's exactly when consistent profitability becomes possible. The market will always be unpredictable. There will always be losing trades, unexpected news events, and periods of drawdown. But when you're no longer fighting yourself, when your psychology supports your strategy instead of undermining it, you become unshakable. Market volatility becomes just market volatility, not a personal attack on your self-worth. You start to understand that the market isn't testing your analysis or your indicators. It's revealing your psychology. Every trade becomes an opportunity to practice emotional regulation, to strengthen your mental discipline, to prove to yourself that you can handle both success and failure with equal grace. This is what separates truly successful traders from everyone else. It's not superior technical knowledge or secret strategies. It's psychological mastery. It's the ability to execute a plan consistently, regardless of emotional state or market conditions. If you've made it this far, you're already ahead of most traders. You've confronted the uncomfortable reality that your biggest enemy might be yourself. You've looked at the part of trading that most people prefer to ignore. The question now is, what are you going to do about it? Because here's the final truth. You can have the best strategy in the world, but if you can't execute it consistently, it's worthless. You can understand every technical indicator ever created, but if your emotions override your logic when money is on the line, you'll still lose. The dark side of trading psychology isn't that it can destroy you quickly. It's that it can keep you stuck exactly where you are forever, making just enough progress to stay hopeful but never enough to actually change your life. Most traders live in this psychological purgatory for years, never realizing that they're the ones keeping themselves there. But for those who wake up to this reality, who commit to doing the deep work of psychological transformation, the game changes completely. You stop being your own worst enemy and start becoming your greatest asset. You realize that you're not just trading charts and indicators. You're trading yourself. And once you get that part right, everything else becomes possible. The market will always be there, offering opportunities to those who can think clearly and act decisively. The only question is, will you be psychologically prepared to take advantage of them? Will you be trading from a place of clarity and confidence? Or will you still be trapped in the same self-defeating patterns that have held you back? That choice is yours. But now, at least, you know what you're really choosing between. You're not just deciding what trades to take. You're deciding what kind of trader and what kind of person you want to become. What's one psychological pattern in your trading that you know is holding you back, but you've struggled to break? Share it in the comments. Let's start the conversation about the real mental game of trading. Because once you understand the enemy, you can finally start winning the war.